Hello, good morning, and welcome to another live technical analysis. Once again, and as always, we're going to be starting off with the euro against the US dollar. Tomorrow, we're anticipating the ECB's interest rate decision, which the bank is expected to cut by 25 basis points. In terms of the US dollar financial releases yesterday, the JOLTS job openings figure for May came in lower than expected. Furthermore, there was a revision for the prior figure towards the lower end of the spectrum. As such, it implies a loosening labor market in the US, which in turn appears to have weighed on the US dollar. So if you look at the Euro USD, GBP USD, USD JPY, you have seen a general weakening of the US dollar. For today, we'd like to note the ADP norm farm payrolls figure, which is also expected to showcase a loosening labor market. So let's dive into the technicals. Looking at the 15-minute chart, which is ideal, I'd say, for perhaps a day trader, you can see that it isn't really deciding on a particular direction. It's finding some temporary support near the 1.08710 level, which is about to be broken. Your next potential target for intermediate support could be at 1.0861. But overall, for a greater and for a better picture of the particular pair's direction, we should move to a higher time frame, which is the 4-hour time frame. As you can see, it is now breaking below our upwards moving trend line. This might imply that the upwards direction has been interrupted. Furthermore, the RSI, which is currently at the 50 figure, implies a relatively neutral market sentiment. As such, for today, given that we are on the 4-hour time frame, I would maintain a relatively sideways bias between S1 and R1. For the US, we said about the ADP figure, and then we also have the ISM non manufacturing PMI figure, expected to show an expansion in non manufacturing activity in the US economy. Such a scenario could provide some support for the US dollar. Such, we might see a bit of a disparity. And so the ADP could weaken the US dollar, whereas the ISM non manufacturing PMI figure could provide some support for the US dollar. As such, we may see increased volatility in the greenback for today. Moving on to the loonie. Oh, there we go. We have the BOC's interest rate decision today. If you look at Canada's headline and core CPI rates, they appear to be within the bank's 2 to 3% target. As such, we would maintain the view and support the predominant market expectation that the BOC is expected to cut by 25 basis points during their meeting later on today. Such a scenario could weigh on the loonie, excuse me, could weigh on the loonie and could allow the US dollar to move higher. It is still appearing to move in a relatively sideways fashion between the S1 and R1 figure. So S1 is at 1.36 and R1 is at 1.3727. So remaining relatively sideways. Given that the predominant market expectation is for the BOC to cut rates, we would turn our attention to the bank's accompanying statement, in which should it be implied that the bank may continue cutting rates for the remainder of the year, it could further weigh on the loonie. Such a scenario could allow the US dollar to potentially break above R1, taking aim for R2. R1 was placed due to this most recent high, and S1 due to this most recent low. As you can see, significant support around the 1.36 figure. For now, though, maintaining a sideways bias up until the release of the BOC's interest rate decision. They are sized at 57, close to 60, implying some bullish tendencies. But looking at the 4-hour, you have the narrowing of the Bollinger Bands, staying between our sideways moving channel, further implies a relatively neutral market sentiment. Onto cable, from a political point of view, we're noting the first debate between Rishi Sunak and Keir Starmer occurred last night, with polls giving the incumbent Prime Minister Rishi Sunak about 1% in terms of who fared better during the debate. Now, we don't expect that to fundamentally change the polls in terms of the elections next month, but could provide some stability should we see an improvement in the Conservative Party's polling numbers leading up to the election. However, from a technical point of view, once again, ADP and ISM are said to potentially influence this pair as well. We can see that it is resting above the mid-range of the Bollinger Bands, but they are sized at 50, so we'd also have to maintain a relatively sideways bias for the particular pair. So we have the euro moving sideways, we have the loonie as well, USD JPY. We're tracing back up to R1. If I'm not mistaken, we had discussed this yesterday together during our live technical analysis. We can look at yesterday's video. We did say that we would not be surprised to see a retracement and a testing of resistance at 1.56.40. As such, we would still maintain a relatively bearish outlook for the particular pair. Even though the RSI is at 50, it created a lower low and it's testing 50. So if it does not break above R1, we would still maintain our bearish outlook, with the next potential target for the bears being at 153.65, which is our S1 level. Now, if it does manage to break above R1, next target could be at R2 at 157.95. But if we drop down to the 15-minute, so you can see this is a retracement, the one we're talking about. It is overbought. If you look at the RSI indicator, it is due a market correction to lower ground. And on the 4 hour, it does appear to have been testing close to our R1 level. Thus, we would still maintain our relatively bearish outlook for the particular pair. If we move on to cable, same, we've done that. Aussie. So the Aussie is a bit of an interesting story. The GDP rates for Australia GDP rates for Q1 came in lower than expected by 0.1%. Now that may have weighed on the Aussie, but the Aussie may have found some support from the release of China's Caixin Services PMI figure, which came in better than expected, and given their close economic ties, may have provided some support for the Aussie. Furthermore, RBA Governor Bowman also implied that the bank may hike in their next meetings should it be deemed necessary. Now, those comments could be interpreted as predominantly hawkish in nature, which may have further provided some support for the Australian dollar. From a technical point of view, we would still also maintain a sideways bias. Now, it would be easy to just say we would maintain a bullish outlook with AMR at R1, but the Bollinger Bands are narrow, low market volatility, RSI is at 50, so we would like to see the Aussie test support at S1 and then fail to break below for our sideways bias to continue. If it manages to break below, we would switch immediately for a bearish outlook, taking aim at S2 at 0.6515. But looking at the technicals, I would not be surprised to see the pair move in a relatively sideways fashion. Oil appears to be moving lower, so we are now maintaining a bearish outlook for oil's price. As you can see, taking aim for S1 at 71.50. Now, the API weekly crude oil inventories showcased an increase in inventories, which might imply um, a reduction in demand from the US oil consumer, which may have further weighed on oil's prices. Oil traders may also be interested in the release of the EIA weekly crude oil inventories figure. From a technical point of view, you can see the crossover that we were mentioning yesterday, if I'm not mistaken. The RSI is at 30, implying a bearish market sentiment. Now, the widening of the Bollinger Bands also implies an increase in volatility. I would still maintain a bearish outlook as long as it reaches to S1 and breaks below. Not a clear break, but simply a break below S1 would be sufficient for us to maintain our bearish outlook. That being said, we would not be surprised to see a retracement of oil's price. We use our Fibonacci retracement tool. Will not be surprised to see a retracement of oil's price up to R1 before it moves lower. And now we simply need to remove our Fibonacci. So maintaining a bearish outlook. Moving on to gold, you can see that it is still resting near R1, but has failed to break above. The narrowing of the Bollinger Bands on a daily time frame does imply some low market volatility. RSI being at 50 also implies a relatively neutral market sentiment. But dropping down to the 4 hour, you can see this slightly more clearly. You have lower highs, that's one, that's a second, and you have lower lows. This could be a higher low, but based on the wick and based on the price action, I wouldn't switch our bearish outlook in favor of a bullish outlook just yet. For a bullish outlook, I would require the commodity to break above R1. So a clear break above R1 would be sufficient for me to switch my, I'd say, bearish outlook towards a bullish outlook. For now, still bearish for gold. I do believe that this could be potential retracement before it continues on its ascent, with the next target potentially for the bears being S1. In the event that we are wrong, we could see the precious metal remaining in a sideways fashion between S1 and R1, as long as it respects the S1 and R1 support and resistance levels, respectively. On to the Dow Jones 30. This for me would be a retracement, so it moved lower significantly, retracing. close to 50, so could be relatively sideways between S1 and R1. But from a more macro perspective, I would be slightly bearish for the particular index. S&P 500 staying sideways between S1 and R1, potentially up until the NFP figure on Friday. The Nasdaq is recovering slightly, hasn't really broken below S1. Yes, it did wick down below our support level, but it didn't close below. So it dipped, took perhaps some liquidity, forced some stop losses, and then moved higher. We would maintain a sideways bias for the Nasdaq 100 index. RSI 16 does imply some bullish market tendencies. Nasdaq at 59 as well, some bullish tendencies, but overall, I would be slightly bearish. Now, as you can see, Boeing is actually testing our resistance level at R1, 182.20. The RSI has moved and accelerated from below 50 to above 50 and closing on 60. I would now switch for a bullish outlook for Boeing as long as it breaks above R1. If it doesn't, I would switch for a sideways bias between S1 and R1. Breaks below S1, resuming its descent. But based on what we've seen, it's broken above a previous high, formed a new higher low. Such could be a bearish indication for the company's stock price. Airbus appears to be on the decline, actually resting on S1 at 152.77. RSI still below 50, close to 30, does imply some bearish tendencies. Nvidia does have a stock split set to occur this Friday, so it's a 10-to-1 stock split. We will see the price being readjusted down to roughly, if we take the yesterday's close at $115 per share. Apple appears to be moving in an upwards fashion. RSI at 70 does imply a strong bullish market sentiment. Upwards moving trend line continues to be validated, testing R1 at 195.30, further supporting our bullish outlook for the company's stock price. Onto Netflix, it's resting on our old R2 level. So, despite actually the issue with the RSI is that it's dipping below 50. If it does make a clear break below S1 of 631, we would switch for a bearish outlook down to 584.05. If it bounces off and moves higher, we would switch for a bullish outlook taking S1 at R1 at 674.30. Tesla still moving relatively sideways, nothing major occurring for the company. IBM has dipped below, well, it's actually below our resistance level at 166.70. It has broken above our downwards moving trend line. It might imply a bit of hesitancy from the bears, but respecting the R1 does not mean it is moving in an upwards fashion. Instead, I'd opt for a relatively sideways bias, so failing to break above R1, moving down to S1 and failing to break below S1 would be sufficient for a relatively sideways bias for the company's stock price. Onto ExxonMobil, does appear to be moving in a relatively downwards fashion, gapped lower, RSI is below 50, S1 for us is at 109.10, S2 104.78, and then S3 at 100.60. Should it break above R1, we would switch for a bullish outlook, taking aim for 119.16. Now, I would also like to look at gold once again. If we take the 15-minute time frame, we can place some temporary support and resistance levels. Now, this is not for a more macro view, simply perhaps for the day. Make this a little bit more interesting. So this would be my S1 level, 2,330. The reason behind my 2,229, in order to validate that low, the reason is it formed a swing low. So formed a low here and then bounced off. It appears that there is some support at this level. So this would be our first intermediate S1 level. Lower than that, I would look at where there was an accumulation of buy orders, but not too close to my S1 level. So around here, you can see it wicked lower, gain some momentum, gain some liquidity, and then move higher. Lower than that, I would take this low right here at 2,317. So our intermediate support levels 2,329, 2,323, and then 2,317. These are my intermediate support levels. And in terms of resistance, we are seeing some significant resistance at 2,334. That would be my intermediate R1. This previous high, 2,340. And then higher than that, I'd like to see upon which the price action, should it move higher, it might meet some resistance. This is at a very nice level. It's too close to my R2. As such, I'd opt for something slightly higher, which might coincide with a bit more of the price action. So we're ignoring these two blocks. But if you look at this candle, it picked up. So it did test resistance at this level. And this is validated on other occasions. As such, this would be my intermediate R3 level. Higher than that, let's say, for example, R4, would be this peak here at 2,350. Now, if I was looking at this chart, I'd see this as a retracement. So it did move lower. It didn't break an order low. So ideally, I would have liked it to have broken this low, forming a new lower low. But now we're seeing a formation of a new lower high. As such, if it manages to break below S1, we would switch for a bearish outlook. And the reasoning is you have this high, this low, a new lower high, and if it does break below S1 and forms a new higher low, it's potential indication for a bearish outlook. If we look at the RSI, it is at 50, which could imply a neutral market sentiment. But if you look at the Bollinger Bands as well, it is respecting the mid-range. As such, could have been a retracement before the precious metals continues on its descent, at least from a 15-minute time frame. If we add another indicator, let's say what we could use. We could use the on-balance volume. Now, the issue, these OVV shows volume moving out lower, might be supporting our theory. Let's see. I'd also like to add the MACD, moving average convergence divergence. There we go. Slightly bullish. If it drops below zero, implies that the bears may be taking over control. Would like this to drop below the zero line, in addition to breaking below S1. Would be very nice for a bearish outlook. Next potential target could be 2,323. But if it does break above our intermediate R1 level, then we could actually maintain a bullish outlook as long as it breaks above this most recent high. So forming new higher highs could be bullish. Forming new lower highs and new lower lows is bearish. Such, it would be very interesting to see how the price action continues. If you move on to the 30-minute, RSI is stagnant at 50. We're seeing some resistance at this level that we had placed on the 15-minute time frame. It appears it is showcasing, I'd say, an unwillingness to move higher, but that remains to be seen. From a 4-hour time frame, it did break most recent high. Still, the price action is relatively neutral. At this point, we could even form a sideways moving channel between this low and this peak here. But if you're looking at a 15-minute time frame, it's that and this. So there is perhaps some room for the precious metal to move. Moving on, let's see what else we have today. We've done Apple, Nvidia, we've discussed Boeing as well. We've done the major indexes, USD CAD, testing our one level. So on the 4-hour, I would like to see this 4-hour candle move lower and break this previous low. So higher low, higher high, lower low, and this should be, and if it is a new lower high, could validate our downwards, our bearish outlook for the pair. Cable, USD CAD, Aussie, oil, gold, and then let's see what else we have. Coca-Cola, very nice. Airbnb, Disney. If there is something you would like to see, feel free to ask. ARM has broken above R1, taking in for R2, 8460. Kiwi moving in an upwards fashion. Now this is very nice. New higher highs, higher lows. Bullish outlook for the Kiwi, taking aim for 0.62155, which is our R1 resistance level. Coca-Cola moving in upwards fashion. Google. Now, if I'm not mistaken, there was a news report that Google will be laying off at around 100 workers from its cloud services um, segment in favor of focusing more on AI. And as we all know, I say at this point in time, anything that is related to AI tends to provide support for the company's stock price. As such, I would not be surprised to see the company's stock price move higher, perhaps in today's trading session. Bank of America resting above 50, slightly bullish. Ferrari resting above RS1 level of 410, sideways bias, not bullish but nor bearish. Let's look at Intel. Intel is still resting above our S1 level of 2978. Now, the RSI is at 40, which does imply some bearish tendencies, but as long as it rests above my S1 level, I would maintain a relatively neutral outlook. JP Morgan, we could readjust our resistance level at 202.88. So I have R1, R2, R3. Support levels, RS1 level could actually be brought slightly higher. 195 point, let's say 35. So you have your S1, S2, S3, and then you have your resistance levels as well. Sideways bias, narrowing of the Bollinger Bands, RSI resting on 50. It feels as if overall the markets are expecting the NFP figure on Friday. We're not seeing something too major. So apart of the ones that appear to be um, clear in terms of their direction, for example, Boeing's not that clear, but if it does break above our one, then we switch for a bullish outlook. But if you look at the euro, the pound, the loonie, the Aussie, all appear to be moving in a relatively sideways fashion. So in terms of FX, they're all waiting, I'd say, for the NFP figure. Here's the JPY retracing higher. Now, I wouldn't say sideways for the pair. I would maintain my bearish outlook as long as it doesn't break above our one, as we said before. But then you have oil, which is bearish, gold, relatively, let's say, sideways, but with some bearish tendencies. But overall, I think the markets are expecting the NFP figure on Friday. And thus, we might have something more interesting next week. We do have the FMC's interest rate decision, if I'm not mistaken. So that might be interesting as well. But for this week, I would place more emphasis on simply the NFP figure on Friday. BOC's interest rate decision later on today. Then we do have the ECB's tomorrow. And then the NFP on Friday. So BP does appear to be moving in a relatively downwards fashion. Note it did gap lower, resting just above our support level of 458.70. RSI is below 30. Does imply bearish tendencies for the company stock price. Breaking below S1. Bear's next target could be at S2 at 443.20. Lower than that, 423. If it reverses direction and breaks above R1, next target could be R2 at 495. New Zealand dollar does appear to be moving in an upwards fashion. Note, very nice upwards moving trend line. Bollinger Band tilted towards the upside to imply some bullish market tendencies. RSI is at 16, further supporting our hypothesis of some bullish tendencies. But if it does break below our upwards moving trend line, test support and bounce off, we could actually switch for a sideways bias as well. But if it does break above our one, then we would maintain our bullish outlook. Seeing Coca-Cola might be interesting for us to do technical analysis. See if there's anything a bit more interesting. There's on your GP. Let's do Coca-Cola. For Coca-Cola, I think we should just remove everything that we had. And then let's take it from the start. So we're on a 4-hour time frame for Coca-Cola. As you can see, for our time frame, you can drop to 30-minute, 15-minute, depending on your own particular preferences. But for us, we do like to use the 4-hour as it does give us about a week in advance in terms of our support and resistance levels. Makes it easier for a more macro outlook of the company's direction. Now, without any support and resistance levels, moving averages, and then you do have the RSI indicator. Just that. Peaked lower. So this is where it came along. It did break our sideways moving channel. So you can see once it broke, tested, and then bottomed out at this level. So looking at this for me is a support level. It bottomed out and then came back up. And not only did it come back up, it broke higher than this boundary, which could have potentially acted as a resistance level. Doesn't coincide exactly, but there are some indications that this could have been near a resistance level. Let's bring that back. So this would be my first support level. Looking at the price action, it accelerated, moved higher, formed a high, failed to form a new higher high, retraced lower. That's all right. People potentially exiting their long positions, retraced lower, and then the bulls took back up, took over, breaking this previous high, which acted as a resistance level. And as such, we would now maintain a bullish outlook for the company's stock price. Why? It's broken an old high. If you look at the RSI, bounced off 30, and not only did it bounce, it accelerated to 70. Bullish tendencies, so stayed above, stayed above, stayed above, up, broke below 70, implying that there might be the bullish momentum may have been fading away. Actually came down to roughly 30 again, bottomed out, and then moved higher. So from a more macro view, we would be bullish for the company stock price. Now, if you'd like, you could also add an upwards moving trend, but looking simply at the price action would be sufficient. If you're asking for S1, it's all tied here. Now, it is close to the price action, but this used to be a resistance level. So if it does move higher and comes back down, this could act as our new support level. So this is from the 4-hour time frame. You can see accumulated some buy orders, moved higher, broke above this old high. The RSI tends to support our theory as well. It is at 68, which does imply some bullish market tendencies. Now, having placed our support levels, we do need to find our resistance levels. So we go back in time and see the old price action. So this is the point at which the company stock price closed yesterday. Our first resistance level would be this old high here, lower high, lower lows, bearish, broke below, and then moved significantly lower. So this would be my new resistance level. And then my R2 at this high here. That's a bit too close, so perhaps we need to readjust our price action. Because looking at our support levels, we have given them a lot of space to move within. So placing my resistance level that close to our one wouldn't really make sense from the way we're looking at it. So we're looking potentially monthly resistance levels. Like this would not be, in my opinion, ideal for a day trader. It would be ideal if it is meeting a significant resistance point, at which you can see from a more macro perspective was significant. But in terms of scalping, etc., might not be that helpful. So we're taking this old high. Now, this would be too far. So I place it here and then giving it some space would be at 67.06. Albeit the resistance levels are fairly close to one another when compared to the support levels, but that's what we have to work with currently. As you can see, all-time highs. As such, we are a bit limited in terms of the space we can put our resistance levels. But overall, resistance at 64.17, 64.15, if you just round that up. Then R2 at 65.45, then you have R3 at 67.60. Does appear to be moving in upwards fashion. Would not be surprised to see it break above R1, take aim at R2, before then retracing lower. So something similar to this price action, forming a high, let's say hypothetically at R2, then forming a new low at S1. So coming back down to test that this is actually a support level before continuing and an attempt to break its all-time high figure. So overall, we would maintain a bullish outlook for Coca-Cola. If you look onto the daily time frame as well, much nicer picture. Let's see. You can see if you look at the RSI, Dipped on 30, broke above 50, switch, bullish outlook, bounced off 50 roughly, and then is moving higher, taking aim for 60, for the reading of 70, which does imply a bullish market sentiment. So bullish for Coca-Cola's stock price. And then let's do one more. It's interesting. We've done Intel, JP Morgan, we already have. Home Depot, Reddit, Amazon. We could have a look at Amazon as well. So looking at Amazon, the RSI is recovering, let's say, to the 50 figure, which does imply that the bearish market sentiment may be fading away. But if we look at the other technical indicators, so the Bollinger Bands could be tracing simply to the mid-range. There is also a downwards moving trend line having been formed, so still being valid. Could retrace to the mid-range before breaking below S1, taking aim for S2. If it does break below S1, we would maintain our bearish outlook down to S2 at 165.87. If it does manage to break above our downwards moving trend line, we would switch for a sideways bias between S1 of 174 and R1 of 183.25. Breaking simply above R1 would be sufficient for a bullish outlook for the next potential target of the bulls, potentially being at 190.25. Higher than that is 199.00. But if you look at the downwards moving trend line, despite the RSI bouncing off 30 and recovering to 50, for me, it would still be bearish. This could be simply a retracement before the company stock price continues on its descent. As such, we would maintain a relatively bearish outlook for Amazon stock price as long as our downwards moving trend line continues to be validated. And by continuing to be validated, I don't mean um, not even wicking above it. So if it does wick above, like this scenario here, but closes below, it's still valid. If it breaks above and closes above, then that for me would be a break above the downwards moving trend line and could signify an end to the company's stock price moving in a downwards fashion. So an interruption to the direction upon which the stock price currently appears to be moving. And with that, I think that does it for today. Thank you very much for watching, and we'll see you all tomorrow.
Okay, hi everyone. Welcome to today's webinar. So before we get started, I'm gonna give about 2 more minutes to let more people join our session before we get started. In the meantime, let me know if you can hear me and see me in the chat. And yeah, I'll see you guys in about 2 more minutes. You can see more people coming in. So yeah, we'll start in about 2 more minutes. Thanks everyone. Okay, I forgot to start my recording earlier. Okay, no worries. So it shows strong recent bearish divergence versus the RSI. So that's the main point. But lastly, you can see that we have a combination of the RSI breakout of the ascending trend line. Secondly, we have a bearish divergence. And lastly, we have price itself breaking out of the ascending trend line. So that all gives us a really high probability that price is going to continue to break out of the ascending trend line and move in a downtrend. And you can see that's exactly what happened. Price broke and dropped strongly. Okay. Okay. We have another example here. So you can see, we really have a lot of examples to go through today. But basically, in this example, both prices are moving in a descending trend line. RSI is breaking out of the trend line. Um, okay, and then subsequently, we can see that there is a bullish divergence. Price is making a lower low. RSI is making a higher low. Okay, so that's a bullish divergence. And currently, price is testing the descending resistance line, and we're wondering if it's going to break out of it. So with all 3 points, firstly, it's testing the line. Secondly, we have this RSI breakout of the descending trend line. And lastly, we have a bullish divergence as well. Okay, and that all shows a successful breakout of descending resistance line as forecasted by our RSI. Okay, any questions so far? Okay, all good. Now let's look at some GIFs that show us how a bullish divergence works. So if we take a look at the image first, price is moving in a descending trend line. And we can see, so the first thing is we see price moving in a descending trend line. Second thing is we have a bullish divergence on our stochastic. So price is making a lower low and our stochastic is making a higher low. So that's the second thing. And lastly, we have our resistance level, that the swing high, which is in line with our 100% Fibonacci projection. Okay, and then if you look at our GIF, you can see what happened after that was that price subsequently broke out of the descending trend channel, and moved upwards, testing that resistance level very strongly and reacted off of it multiple times. If you're wondering what resistance level I'm talking about the 1.56099 level. Okay, now let's look at another example. Here is more straightforward. We just have price moving in a bullish divergence with price making a lower low and stochastic making a higher low. And subsequently, after that, we also see price moving upwards. And in fact, it actually moved above our Ichimoku cloud as well, which suggests a bullish signal. Okay, do you guys have any other questions? If not, let me just pull up my charts and we can look at a couple of charts together and see if we have any support or hidden support resistance levels or any divergences. Okay, if you guys have any charts you'd like me to go through, let me know in the chat as well. Okay, let's look at um by looking at AUD maybe. Okay. Okay, so on our weekly time frame, prices are moving in this descending trend line. Okay, so again, what makes a valid trend line is if there are at least three touches, which you can see here, we do have that. And then let's go in with on a daily time frame to go in with our support and resistance levels. So I'm gonna see if I can identify any trends first, but here we see prices kind of ranging. Okay, so firstly, I'm gonna place my pivot over here. Okay, I'm gonna label this as an intermediate resistance. Okay, and then my first resistance, I'm just gonna place it up here. Okay, and then for my first support, I'm gonna place it at this double swing low. Mm, okay, and I try and pull it back as far as I can without cutting too many bodies of candlesticks. Um, yeah. So for example, over here, I would not place it here because of this area here that cuts a lot of candlesticks. So if you're just cutting the wick like we are doing here, that's perfectly fine. Okay, now let's go in with our Fibonacci levels. So I'm gonna go in with a retracement and I see my 61.8 line up with my first support. Next I'm going in with a projection. Don't think. Okay, 61.8 lines up nicely. And over here, I think we have another extension. Yeah. So for extensions, we use 127 and 161.8, and we are using a Nike tick kind of shape. So if you can identify this kind of pattern, then you can use this 127 and 161.8. Okay. Uh, Again, these Fibonacci levels don't have to line up exactly at the level. As long as it's kind of near that level, that's good enough. Okay, so let me just highlight this level here because we have a confluence area, which is basically when two or more Fibonacci levels line up in the same area. And you can see my 61.8 also lines up with that area. And my 50% actually as well. So I'm just going to keep those two. Okay. So here we're definitely going to expect to see some resistance in this area here. Now let's pull out our indicators. I like to start off with Ichimoku and MACD because at one glance you can see exactly what these signals are. So for Ichimoku, price is currently moving in the cloud, so we can't really say much, except that the trend is probably changing. So we see price was moving below the cloud before, which is a bearish signal. Now that it's moving within the cloud, we might see prices um, move in an upward momentum instead. But we can only confirm that once price has moved above the cloud. So I'm going to remove that for now. And our MACD is also giving us a bullish signal. Okay, so that supports our analysis. Let's look at stochastic first. Okay, if we go back to my slides, we typically look at 533 as our settings. So let's use that. Okay. Um, okay, let's see if we have any divergences. Over here, I can see that we do have a hidden support. So this is the tool that I was talking about earlier. Basically, okay, I'm gonna hide my MACD first. Okay, so basically when price is making a higher high like we see here, okay, just a second. I might change this back to 21. Okay, reason being my time frame is daily time frame. Um, here. So between these 2 points, right, price has made a lower low, slightly lower low, or rather, price is making the price is moving in this first support, okay? Whereas over here on our stochastic, we can see a very sharp difference. Price is definitely making a lower low. Okay, so this could suggest that price is going to continue to drop down here. Okay. So even though the default settings are normally 533, you can adjust it according to the time frame that you're using and according to like what works best for your chart and your trading strategy. Nothing is ever, set in stone. It's really dependent on what charts you're using. So yeah, feel free to adjust it accordingly. Okay. I guess another example we can see if we can find more divergences just from this chart alone. Okay, price is making a lower low here, and here it's making a slightly higher low. You can see immediately after this, if we replay it, okay, you can see price proceeded to move in an uptrend after that. Okay, that's a pretty small example, but yeah. Okay. Any requests for any charts that you guys would like to see, or any examples you want me to go through? Mm, oh, we can take a look at stochastic as well. Okay, so we're looking at stochastic now. Let's look at RSI. Mm, can I add more examples on the chart? You mean do more of these divergence examples? Identify more divergences? For example, over here we have a hidden support, okay, whereas on our price, it's making a lower low. Okay, and the tool that we're using is this, just the horizontal line. So it makes it really easy for you to identify whether it's a support or if it's a divergence. Okay, a very simple one to identify is over here. Okay, so you can see price making a lower low and our RSI making a higher low. Okay, you can see after that price proceeded to after this divergence, price proceeded to shoot upwards. Okay, yeah, so yeah, that's on the RSI. Um, okay, another one here. Price making a lower low. Okay, and then RSI making a higher low. Okay, so then you see price also shot up after that. Okay, shall we look at another chart? Okay, let's just focus on looking for divergences, I guess. RSI, stochastic. Let's focus on RSI first. So on our RSI, you can see price moving in this support level. Okay, but then you can highlight the points that you're looking at as well to make things easier. And price is making a higher low, whereas here we have a hidden support. Okay, after that you see price shoot up as well. Mm. Another example over here. Price making a higher low, sorry. And here price is making a lower low. Okay, so this is a bearish divergence. Okay, hidden resistance. Now maybe we take a look at that. Over here, you have a hidden resistance level from between this point to this point here, right, we can definitely see that price was making higher highs. Okay, so we also see subsequently price proceeded to drop, reverse off of this resistance level. Okay. Okay, any other questions? Anything you guys want me to go through? Any charts you want me to take a look at? Um, okay, if not, then that's all I have for you guys today. Thank you guys so much for joining me. I'll stick around if you guys have any other questions. But if not, that's all for today. Thank you guys so much for joining me. I hope you guys found this helpful, and I'll see you guys again next week. Thanks, everyone. Bye. Have a great rest of your week. Thanks, everyone. Yep, take a look at euro dollar. Sure. Do you want to just take a look at the divergences, or you want me to do a analysis? Yep, we can do both. Okay, so on our daily time frame, we have this as our first resistance, and then my pivot, right? And then lastly, my first support just here. Okay. Um, yeah, so then I'm going in with a projection. Okay, my 61.8 lines up nicely. Going with retracement, my 50% lines up. I think my retracement here also lines up. Okay. Um, so here we have, oh, not really. Okay, I think that's all the levels we have. So then we pull out our indicators, Ichimoku MACD. Okay, price is moving within the cloud, so we can't use that. MACD is moving, ascending in a bullish signal, sorry. So if we look at stochastic, um, here price is kind of moving upwards, right? Making a higher low. Mm, okay. Here it's kind of it's not really a support level, kind of making a lower low here. Okay, you can see from the dotted line that it's not horizontal, right? So it is slightly um, moving in a downtrend, or rather making a lower low. Okay, so it is a bit bearish, so we might continue to see it move down. Okay, similarly for our resistance, here we have a hidden resistance level. Okay, and then we see price moving in, making a lower high. So that might actually be better than this. Yep. So this is a bearish divergence as well. Okay. Yep. No worries. Okay. Yep. If there's nothing else, uh, that's all for today. Thanks everyone. Bye.